Imagine holding a token that loses 99% of its value from the absolute top. That steep, violent drop wiped out early investors and shattered trust in the ecosystem. Normally, that means a project is completely dead, but the team behind this one is actually hiring and rewriting their core roadmap. They brought in Max Bronstein, an early executive from Coinbase, to take over as chief operating officer and lead the rebuild. That makes this project the ultimate test case. It is carrying massive historical baggage, but trying to execute a highly orchestrated comeback in real time. We are talking about SYN. To be clear up front, SYN is an Ethereum token. It does not run its own independent blockchain. Historically, it has served strictly as the governance token for the Synapse protocol, which is a widely used cross-chain bridge. This chart places a tiny current market cap next to the $55 billion in asset transfers Synapse has successfully processed. But that massive utility is disconnected from the flatlined token valuation. If a governance token doesn't capture protocol revenue, holders get nothing. Bridging assets wasn't enough to drive demand for the token itself. To survive, the team had to make a sudden and drastic change. They are aggressively pivoting away from their sole identity as a bridge and jumping straight into AI agent trading. To do this, they are launching a new sister project called Cortex.ai. AI agents require the ability to move assets between blockchains instantly to execute autonomous trades across the market. Synapse is leveraging its existing bridge infrastructure to provide that necessary cross-chain mobility for the Cortex ecosystem. This strategic shift redefines SYN's role from a standard utility tool to a speculative bet on autonomous agent liquidity. The math backing that bet is extreme. The current market capitalization is sitting right around $8.5 million. Out of valuation that microscopic, you have to expect severe volatility. It takes very little capital to swing the price in either direction, making it highly susceptible to manipulation. Out of the total tokens that will ever exist, there are currently 214 million SYN circulating on the open market. This pie chart shows that the absolute maximum supply is hard-capped at 250 million tokens, leaving very little room to run. Because the current circulating supply is already pushing right up against that maximum limit, current holders don't have to worry about sudden, massive inflation shocks diluting their positions. So the supply math is actually favorable, but a sub-$10 million valuation means this is strictly an arena for aggressive speculators. Cautionary, but there is a massive execution risk you need to understand before touching this: the dual token structure. This flowchart illustrates the new mechanic where existing SYN holders are given the option to convert their holdings into the project's new CX token. Right now, the two tokens are officially treated as interchangeable within the ecosystem. Having two tokens for one project fractures the community's attention and splits the already thin trading liquidity across two completely separate assets. If this migration process hits a technical snag, or the community gets confused about which token holds the real value, it will wipe out whatever remaining confidence the market has. It is a massive, unnecessary hurdle. Conservative capital generally avoids any project actively undergoing a complex token migration. Looking at the actual price today, SYN is trading at roughly 4 cents. This chart tracks the token's brutal collapse from an October 2021 peak of $5.01 all the way down to today's 4-cent flatline. The heavy, sustained selling pressure over the last 3 years has left the chart with a deeply bearish structure. For traders looking for an entry, the critical do-or-die technical level to watch is the recent support floor down near 3.6 cents. If the price breaks below that 3.6 cent floor, expect aggressive capitulation. But if it holds, it offers a very tight, well-defined risk setup for a gamble. This matrix lays out the objective trade-offs. On the bullish side, the protocol has proven it can handle massive historical volume, and it is now aligning itself with the hottest narrative in crypto. On the bearish side, you are underwriting an asset that already wiped out 99% of its peak value, while navigating a highly confusing token migration that splits liquidity. SYN represents the ultimate trade-off dilemma. You can buy into high upside narrative momentum, but you have to accept extreme structural baggage to get it. Here is my honest take. Synapse is strictly a high-risk turnaround bet. It is absolutely not a blue-chip hold for a long-term portfolio. Unless you are completely comfortable losing your entire investment, You should wait to see how this CX token migration resolves before putting any real capital on the line. If you do want to take the risk today, you can trade SYN on Binance and Kraken, or swap for it on Uniswap. Remember, this analysis is not financial advice. Always do your own research and manage your risk carefully. Smash the like button, subscribe for daily crypto breakdowns, share this video, and let me know in the comments below, are you bullish or bearish on Synapse?